afternoon and welcome to Algo-Chain's Digital Wealth Management webinar series. This is the first one we're setting up after a lull of having run some webinars, but there's been such a sea change in the wealth management industry since we've all been in lockdown. It's now become essential to get back into the market. The first episode we're running this week is called Integrating Crypto Assets into a Wealth Manager's Portfolio. And we're going to take a deep dive approach today. I myself have not used too many crypto products, but there's so many questions and I'm pretty confident everybody else has got the same challenge. So today I would like to welcome our panelists. We've got a couple of hands-on specialists, which is fantastic. We've got Jan Gottschalk from the family office of the Inval Group and Patrick Bruver, who's a portfolio manager for Plutos Wealth Management. Let me tell you about Algo-Chain first. I'll tell you about myself, and then we're going to get the panelists to introduce themselves. So Algo-Chain is a firm that's built to really help wealth management make the most of technology and what ETFs can do for them. And we've seen actually in the last year an increasing number of digital products coming to the market, particularly through Germany and Switzerland, listing a whole range of digital currency exposures. And we are getting increasingly involved in finding ways that we can safely manage them in our portfolios. Basically, Algo-Chain is a fintech firm, and we operate on a B2B basis. Today's webinar actually has been brought in association with Wealth Advisor, who is an online media firm in the UK that's also the owner of ETF Express. They've been big supporters of the innovation market, and their owner and CEO, Beverly Chandler, has been doing a great job promoting that. So without further ado, let's get Jan and Patrick to introduce themselves.
Yes,
so,
hello. Yeah, thank you. My name is Jan Gottschalk, as you've mentioned already, from Inval. We developed from the family office of Frank Gessner. He was the founder of Intershop in 1995, and he had his IPO in 1997, and that was, you may call it, the first fintech unicorn in Germany at that time. It was Intershop was the company where you can build up from scratch your shop in the internet, as the name says, quite simple as that. Had a market value of 13 billion euros at the end before the crash came. Frank Gessner had another company, Delivery Hero, where he was CTO during the IPO. So he's made a lot of experiences in the fintech market already. And he started with investing into Bitcoin and Co. in 2016, but he found out easily that it's not quite an easy market. So because of the fact that he's an informatic guy, he's a programmer, he tried to find solutions for problems, and he started programming. And then at the end of the day, friends asked him if they can't join him while investing into cryptocurrencies, and so he developed Inval in 2018 as an entity in Liechtenstein and Dubai and Berlin. And what we do actually is blockchain asset management, but more about this later.
Good stuff. Patrick, please.
Yes, my name is Patrick Grew. I am portfolio manager by the Plutos Wealth Manager. We are wealth manager with over 600 million assets under management. And we started in last year with the first crypto wealth management for private customers and institutional persons. And one of my parts is to describe the complete project, find the right assets in the crypto market, and build portfolios complete for customers with a part of cryptos. And yes, that's what we do.
Okay, right. So let's sort of set the roadmap for the the webinar. Basically, what we want to do is to get an increasing number of what I call the more familiar way of running a wealth management business to get much more comfortable with the next generation of digital products. And to do that, actually, we're going to have both of you guys who've got hands-on experience to sort of spill the beans a little bit about how you manage to run your business and some of the challenges you've found, and some of the ways that you've been able to actually turn this opportunity to your real advantage. It's not sufficient for us to think in terms that there are investments you can make that have, great returns, but of course it's a much broader challenge than that, actually. So let's not be too presumptuous. I want to sort of firstly talk about what the blockchain story is and why that leads to a range of investment opportunities. Then, of course, we want to understand what the trends and being the big drivers in the last year. Of course, then there's the very much investment challenge question of, so how do they actually generate better risk-adjusted returns rather than risky returns? And some of that spill in the beans of how you actually go about your day-to-day business. What are the steps? What's the research process? Then, of course, we can summarize that at the end and see what the key takeaways. So without further ado, blockchain. What's the essence of what's going on there? So either Patrick, do you want to go first, and then we hand over to Jan?
Yeah, we have incredible opinions with the complete blockchain thematic, and blockchain as technology in one part and blockchain as asset in the cryptocurrency. So in the industry, we have many paths to new products with blockchain. We are on the first step in this complete market of the complete thematic, and the other side is the cryptocurrencies, is more my part. So, and on this part, we are there on the first markets. Maybe we get a blockchain to a digital euro also, or other assets. So yeah, this is the one way that we can get. And with the other cryptocurrencies, the big one also knows the Bitcoin, Ethereum, the other asset classes. And in the currencies, so it's so much opportunities for normal portfolios that we can use as hedge, or we can leverage with them. And it's as asset class a complete other way. So the wealth managers normally in Germany are also conservative and not so open-minded for the complete thematic. And we are one of the first wealth managers that included in normal customer portfolios. So, and use it for a better performance also.
Okay, so Jan, what would your additional take be around the whole blockchain story and why it's barely began, perhaps?
Well, I could talk about this for ages, to be honest. Did you check in advance? We were talking about this. How many people in the audience already had contact with blockchain somehow? So
Just invest in something.
Yeah, that might be a great idea, because otherwise, I do not want to talk too much about things that everyone knows already. So, but blockchain, it was invented basically in 2008 after the Lehman crisis, when people woke up the next morning and had less money on their accounts, between 40 and 60%, or even when you have a Lehman certificate, even more than that. So people were thinking about how could we, if we already transfer informations via the internet, why not with wealth? But to transfer wealth, you need some secure technique, and this is basically crypto and blockchain technology. So Bitcoin was invented at that time, and to understand why it is so safe, it's like a block is like yeah, like we three would like to see each other tomorrow in the Hyde Park, let's say at 4 o'clock. So, and I sent in WhatsApp to you, Ellen, and to you, Patrick, and you both confirmed tomorrow at 4 in the Hyde Park, at the speaker's corner. And if I want to change this, I can't, because it's in each of your WhatsApps. It's saved, and I can't change it anymore. This is like in the blockchain, so the information which is there can't be changed. This makes it very safe. And but this was in 2008, and we are 13 years ahead of this. And there was a huge development in different areas, but especially in ours. So the financial area will see complete change within the next couple of years. So the point is that you can put any financial asset onto a token, onto a blockchain, which makes it liquid all of a sudden, and that makes it tradable. And this is something, and it makes it cheaper. For example, when I was working for a company called Exporo, that's one of the biggest crowdfunding companies for real estate in Germany. And they used bond structures. And for the bond, you need a bank. And the bank needs money for the bond, of course. And so they decided to put their bonds onto a token. And this token was put into the wallet of the clients. But the clients didn't realize this, because they just have to, put the green hook in one of their dashboards. And so they had the wallet. But for Exporo, it made a significant safe. They saved 97% of the costs per client by just changing the way transferring items from one to the other. And the point was that then it was tradable all of a sudden. So people could easily hand it from one to the other. So I think what we've seen the last years, in the financial area, we had a double each year. So we had 0.5% of each assets we could put onto blockchain in 2018. We had 1% in 2019, and then 2% approximately in 2020. And we will double this again this year. So this is an exponential development. And it is the development is kind of what we've seen in the internet. So if we compare the users of wallets nowadays with people who had access to the internet, we are in 1997. And if you just turn the time back to 1997 and think about Amazon, Apple, Google, Facebook, Netflix, and so on, and then you have the picture. This is where we are right now, with one difference. This market is even growing faster than internet users. At that time, we had a growth of 68% per year in internet users. And nowadays, I think every second on this planet has access. And on the other hand, we have wallet users increased by 113% per year the last years. So I think this is basically, in a nutshell, the story, what we will see now and what we will see in the near future. We still only have 2% of this market, and there are a lot of other markets we were not talking about, but I think we come to this point later as well.
Yeah, okay. So a couple of things. So in the voting, 58% of the audience today, which are quite a few, have already used digital currencies, and therefore 42% are saying they haven't. And that's, quite a significant percentage of the participants. Now, we've had some questions from one or two of the audience. I'd like to sort of get them on the table. They are on our agenda anyway, but I do want to make sure we're all aware of that. It's like, what protections are afforded to clients? If you start going around making recommendations for these products, I mean, that's clearly central to the wealth management responsibility. And like what structures, what tax wrappers, it's all well and good talking about investing in anything, but we do need to understand the broader tax implication. What's a better vehicle to do it? These are all classic business questions, nothing unusual there. They apply as much here. And of course, more recently in the news, we know the whole issue of the environmental impact of going ahead with a whole range of intensive processing powers to achieve an end, and where that fits in with the global direction of travel, which is another thing that's under pressure. So people basically want to sort of get a feeling. This particular member of the audience is asking about the suitability for mainstream clients given the lack of regulation. So those will be topics we'll be covering. Well, what I would add to the blockchain story is a simple statistic of like how many people across the globe are not holding a traditional bank account. I don't know the number, but it's surprisingly very, very high. And do we know that there's an increasing number of those are using digital wallets to transact these products and variations to actually disintermediate the banking industry? That's why this is a big story. So there's quite a range of what we can cover here. So okay, let's do some basic 101 now about the the cryptos market, sort of the size of the market, what coins we're talking about, because I take it as read that we're all starting this discussion that the story is bigger than Bitcoin. So we need to sort of go further away from Bitcoin to get a feeling for it. So Patrick, let you step in and talk about the sort of product set, how big you see the market is. Of course, we've got to differentiate between coins and NFTs, which have been very, very much in the news. So over to you, Patrick.
Yeah, thanks. We have a lot of cryptocurrencies. So each day a new one on the market. So, but the focus there is a little bit difficult because everyone can use or build a new cryptocurrency. So that is a lot of cryptocurrencies. They are only not so famous or not really good for us. So we as wealth manager choose the best 10 of all cryptocurrencies and choose that for the customer portfolios, because the market capitalization about the biggest 10 is a safety way. So then we make a research, read the white papers, we look their ideas behind the cryptos also, and we see all the Bitcoin. The Bitcoin is started as payment, and now I don't know, maybe it's not more for payment to use, but it's the biggest one and one of the biggest cryptocurrency now on the market. And it's like a little bit like an index. So, and we use it to indication the wallet in this progress of so, and we choose the Bitcoin market as a little bit the benchmark for the cryptocurrency because it's the biggest one and with the highest market capitalization also. And then after that, we put with a normal ranking the other 9 coins behind that, and we mix that in the crypto wealth management. And in the normal wealth management, if we use their portfolios also with a little bit part of crypto, we use only the biggest 2, also Bitcoin and Ethereum, and then as a little part of the portfolio. Yes.
Okay, so just to be clear that you integrate those type of digital products with stocks and bonds as well.
Yeah.
It's multi-asset, or is it pure crypto?
Yeah, with crypto bonds. I can't understand it completely. It was a little bit hacked.
Sure. Your portfolios, are they pure digital currency portfolios, or do you put stocks and bonds in there as well? Is it multi-asset?
Yeah, for the multi-asset strategy, we use in the normal customer portfolios like ETPs. It's a little bit easier to invest because the regulatory and it's a better risk level. So if we invest there in ETPs, but also on the other side, if we have a customer that wants only a crypto wealth management portfolio, then we investing directly in the cryptocurrencies about partner banks. And we have the wallet at the bank and have a safety way to save the wallets, save the cryptocurrencies, and have a bank guarantee about the accounts with the Einlagensicherung. So with the safety of 100,000 per bank in Germany.
Okay, so yeah, and how many coins do you study the market for?
Well, we do 80 coins in our managed account. So what we do basically is a bit like what you do, Patrick. When we started, we did cherry picking, but at the end of the day, the market decides which one is the best. And if you say you take, let's say, the 10 best, what you do, Patrick, or we with our, let's say, more liquid trading strategy, we take the best of the top 80. We take the top 80 because I think there are approximately 14,000 coins at the moment. 3,000 are dead already. So if anyone wants to look at them, they are on deadcoin, deadcoin.com. So what we do is we think that the biggest chances are still to come. So there are certainly a couple of hundred interesting coins, interesting blockchains below that as the infrastructure. The coin is always the payment in the blockchain. So if the blockchain is very successful because it's an invention, it's the best solution for a problem which is big enough to have an exponential development within a couple of months. So this is what we are looking for. But those coins are coming into the top 80 automatically. And we rebalance them, and then we do some other stuff. We have 22 algorithms. We do so-called on-chain and off-chain trading. So the informations what we are looking for are all in the blockchain. So you can see who's trading, if it's, if they are the small nervous hens, those guys who had just entered the market and bought their first, 100th Bitcoin. And you can see the whales, those are the people with the huge pockets trading hundreds of Bitcoin, for example. If they do leave the market, if they, leave the market towards their cold wallet, so they pull their coins away, then we know, okay, they do not want to sell at this price. So we have a calm situation and a good idea of a rising market for the next couple of weeks. So, but this is one of, let's say, 7,000 or 8,000 points or parameters in this data cloud our algorithms are looking into each day. But basically, we think that the market did not even has started yet.
So on coins like Polkadot, do you see them as, can you explain whether you've got this layer 1, layer 2 sort of concept in your product set?
Well, there are, layer 1 is always, the basic blockchain, which means this is, the workhorse where you do something on. There are two types of those. One is the, let's say, Bitcoin and Co. These are 30% of coins which have no underlying blockchain as a, for work on with smart contracts and so on. And 70% like Ethereum are basically solutions and stuff where you can trade on, where you can build your token on, or where you can put your bond structure on, and so on. So the point is these are completely different. So if you look onto Bitcoin, it won't make much sense to have a second layer on that. So the most second layer strategies and blockchains are on those working horses. There are blockchains for bridges between two blockchains to transfer value or to make them safer. There are some to increase their speed. There are some to reduce costs. For example, Ethereum, for example, is huge. There are a couple of 100,000 transactions every day, and each one costs a lot of money. And these transactions do reduce your profit, of course, at the end of the day. And if you have just one token, like the bond I've mentioned from my former employee, that might be so costly that you decide to build your second layer surrounding, and you just, you do not have to put any information onto the first layer of the blockchain, but you use a second layer, like for example Polygon. That means that you are in a kind of you are on a parking lot aside of the main blockchain, and you send only a bit of the informations onto the basic blockchain. The security is still untouched, but it's much easier to transfer inside of this bubble information from for and back and so on. And so you have this second layer normally to improve the first layer, so the basic blockchain, or to improve the, let's say, the communication between blockchains.
Okay, so Patrick, let's talk about the clients. Do you have a good handle on what the demographics of your clients are, or are they slightly anonymous in the way you run your business?
Yeah, of course. In the demographic, as all customers, so our clients of the wealth management by us in the house, are very interested of the thematic, and but the real clients for the thematic are younger. So I think so 30 to 40, not really older. And interesting in this part, or in this age, is a little bit higher, because the thematic is near for. And also it's yeah, we start with the complete Cryptocurrencies 2010-11, so, and it was a long time in the news also, and the customers are they all see it, many people know it, or hear the name Bitcoin, Ethereum, and high performance with that 1000% also, but the complete, or the risk in this thematic is only was for a long, yeah, for younger people with a long horizon there for performance also. But if you say I want a very conservative portfolio with only 30% shares also in the portfolio completely, then is cryptocurrency not really the right way for these people. And so if we have customers or clients, they are very interesting in that, and say, okay, we want it over the next 10 years as a future thematic, and then it's a part that we can put it in, and we yeah, say then this is a good way, or for the risk application in that, and for the portfolio, for the customer also, for the risk management. But so the interesting there is only by the younger people. The older people are asked many questions, but are not really investing too much so in this complete thematic.
Okay, so Jan, what if you know a little bit about your client base, are you finding that the issue of the sustainability and needing, you know, power plants the size of a small island to drive a few transactions is causing some negativity, or is that exaggerated?
Well, I'll come back to that question in a second. I'd like to add something to what Patrick said. But the clients who are investing with us do have an idea of what blockchain is, basically. Otherwise, they wouldn't. And then they look for the best way to do it. But what they convince at the end of the day are two things. That one point is that the correlation with other asset classes, liquid asset classes like S&P 500 or the MSCI World, the correlation is always between 0.4 and minus 0.4. So it's normally just around 0, which means that there is no correlation. And basically, this is what every portfolio manager on this planet normally is looking for. The second thing is the so-called Sharpe ratio. Sharpe just one day thought about how can I calculate two different assets, which a very volatile one and the other one, and then he made up his or he invented his Sharpe ratio. Basically, it's just, you know, taking out the risk and then look what's left over from the profit. And the Sharpe ratio of the Bitcoin is somewhere between 2 and 4. That's the double of what you achieve with a normal US stock fund. I think the best one is some JP Morgan or something with a 1.7 or so. And so this is, and what we do, because of the fact that we reduce the risk, we reach 4.4. We are somewhere between 4.2 and 4.8 in the Sharpe ratio. The last 2 months, we had 4.4. So this is basically what they convince. And now coming back to your question about the energy consumption. I've been on this conference the last week that was here in Hamburg, the blockchance.eu. Maybe you would like to look it up. There were some guys selling the hardware. So if you do mining, which is basically 30% of the coins are doing, and only those are those which are, using that much energy. And Bitcoin is the biggest one on the market, of course, with half of the coin market. If you would like to be a miner, you have, first of all, you have to look onto the prices for energy. So normally it doesn't make sense to mine Bitcoin if you have a price above in euro cents 6 or let's say 7 at the moment. So 6 cents per, what's it in English? Kilowattstunde. You may translate this, Alan.
Yeah.
So this is the point. If it's too expensive, it doesn't make sense. So the miners go where the electricity is cheap, and it is cheap where you have a surplus. For example, windmills in Mongolia, where it sounds weird, but there are a lot of them. But you can't use the electricity at night, so you have this energy is just wasted. And what are miners doing? They go to those plants and say, please give us your electricity at night for a very low price, but more than nothing. And during the day, we pay the normal price, for example. And in the average, they are below this market price and have the possibility to mine efficiently. And this is the reason why 70% of each mining electricity is nowadays sustainable. So it's from the most of them are from windmills, but there are some geothermal like Iceland, and there are some water plants like in hydro like in Norway, for example. So a lot of those miners are where the energy is very, very cheap, because otherwise it doesn't make no sense.
So I've got a binary value question for both of you here. So do you think in the medium to long term, the issue around the inefficient energy costs, the use of energy to drive this new industry will go away, or will it become a big issue? Well,
at the end of the day, the miners will only take as much energy as it makes sense to mine. That sounds a bit weird, but the Bitcoin is the algorithm of the Bitcoin. It's said that every 10 minutes a new block should be mined. If it's quicker than that, the algebra in this function is more difficult. You have, for example, more zeros in the solution in the below of the block. So it is more difficult to find a solution. If there is less energy or less capacity, less PC capacity in the market, it will reduce the difficulty. So, and if the energy is getting more and more expensive, it's just, this is just mathematics. If it's too expensive, the miners will go out of the market, and the difficulty will lower, and that's it at the end of the day. So it's always this question. And I think, well, yes, you're right. It will be more energy needed, but at the end of the day, if everybody knows I don't know if everybody knows it, but every 4 years, there's the halving. That's the bonus for each block that you are mining is halved, so that you're getting only, well, half of it next time. So in 2020 was the last halving from 6.5 to 3.25 Bitcoin. So and next time it is only 1 point, help me calculating, 6 something. So that means that at the end of the day, you always have to calculate, does it still make sense to mine with this cost of energy? And this is a balance that I see that is very smart, and that helps, keeping out too much energy out of the market, and on the other hand, make it still very, very safe.
Patrick, what did you think when El Salvador, I think it was El Salvador, jumped in to use Bitcoin as a sort of a national currency? A, from an energy perspective, and B, from a strategic decision perspective. Very interesting, wasn't it?
Yeah, it was a very good experiment for the people there, but it was not really good because the prices, or the inflation there, and the prices are not more so in this right position there for the people in El Salvador. That is a normal use case. But on the other side, we can see that in this use case, more people make a wallet, see the similar path to the bank, and choose. We also here in Germany have the moment all people have a bank account, but a wallet, nobody has a wallet. Only people, they know the crypto scene, or crypto wallet, or as asset, or a bank also. But there, with the step to use a cryptocurrency to national currency, we have the part that we can more people have more information about the complete thematic, and choose a wallet used as payment. And on this side, it was really good for the people there. But on the other side, with the inflation problem and the complete political thematic for the country, was maybe not the best way. So
maybe I may add something to this, because
Please,
on this conference I've mentioned on blockchains.eu, there was a congressman from El Salvador, and well, the audience, that was a kind of a party. He was kind of a hero for people in the blockchain industry, and he told us something about, first of all, in his eyes, it was a success because they, with the profits they've made from last year to now, they founded some children hospitals, schools, and they even started to mine themselves. And they are building the so-called Bitcoin city, which is very close to a volcano, and this volcano delivers cheap energy because there's a lake aside. That's the perfect surrounding for Bitcoin mining with hydro energy, or in this thermal energy in this case. And so they have another case of sustainable energy, mining Bitcoin, and helping a community to grow. And what you said, Patrick, that's absolutely right. Before they had the Bitcoin, they were dependent on the US dollar. And so they had no influence on their own currency, which sounds weird for European people, but in this case, it was unavoidable. So they choose the Bitcoin as an alternative to the US dollar, where 40% of the US dollar which have been printed within the last 3 something years. So this is a kind of blowing up of the fiat value of paper money. And on the other hand, you have Bitcoin, which is growing, which is doubling each year. And to come back to this wallet question and bank accounts, he told us that 30% of the people from El Salvador only had a bank account before they introduced Bitcoin. And now over 80% have a wallet, and they have a cool name for it. I have forgotten the name, but it's cool. The name for it is cool, like Chivo or something in El Salvadorian. So it's kind of a Spanish accent, I guess. And they have transfer money from the Northern Hemisphere, especially from the US, of course, of 7 billion a year, and had transfer costs of $400 million US. So, and this is something they reduced to zero, because everyone, has a wallet now and transfers from one wallet to the other, and the transfer cost inside of this, well, state-built wallet is zero. So this is a huge advantage, and some Western unions and so on companies have to think about their business model, I guess, if this is making school everywhere on this planet, because this is one of the major advantages of coins. They are so easily to be transferred that it doesn't make sense to use anything else anymore.
I'd like to bring a fact actually that I learned recently to everybody's attention. So apparently in China, there's been 140 million people who have opened wallets for the new Chinese digital yuan currency. And that's seen about 10 billion of assets in the wallets. And this is a statement from the official central bank team. This is not chit chat on Twitter. So it could be that El Salvador, in fact, is in the vanguard and not in the trailing part of the story. And it could be the Western economies that will eventually realize they've been quite flat-footed. Let's see if we can get back to what we call the wealth management part of the story now. And basically, I'm trying to imagine that if I turned up in your building, I could understand your setup for your back office function, issue of custodians. Do you have sort of like a parallel universe set up where one half of it you trade stocks and bonds, perhaps, be the ETFs, and the other half you're doing wallets and digital products? Or is it one happy family? Like, what makes a good custodian solution here, and how can I integrate both the products in there? That's a real world problem, isn't it? So do you want to go first, Patrick? How have you set up your business to run the back office function?
Yeah. First of all, the complete implication processing of crypto wealth management was the pioneer working. So we was the first one, and we need, as wealth manager, we have the money by us. So we need only a deposit bank for this, and we need a desk for trades. And normally we, as private person, I can choose a crypto exchange and can trade there and choose it on my own wallet also. In the regulation of Germany is a little bit difficult because we need a deposit bank, we need a safe system. So if we have wallet in the bank there, we need a trading desk there. If we can trade cryptocurrencies for the wealth management, and first of all, we have a solution for that. We can choose and can build a crypto portfolio, so for every customer, but the complete work in the back office was a little bit, or it's a long process for us to develop this, and we developed the processing completely in this year too. Also, we are not finishing. We are on the order mask. We are on the complete part in the back office, on the complete digitalization, the thematic, but it's we can not image that. That's for any banks. It's normal to fax some paper stuff. Also, normally we send emails and we implement the complete process for the routine part. And yeah, we are one of the first, and also we can do it with the costs are much lower at the moment as we're starting, but we hope it will be better and better. And if we have more assets under management in the wealth management or in the crypto wealth management, then we can put down the costs also for our customers and clients.
Your own perspective, Jan, would that be similar, or are you seeing a different solution sort of framework that you're following?
Well, at the moment, we do have so-called managed accounts. That means that we take the hand of the client, help him opening his account on FTX, which is technically, and in our point of view, the most advanced exchange in the crypto world at the moment. And we have only an API, so like, you know, the possibility to trade on his account, but we are not able to take any money off it. And then we trade this 4 baskets, 80 coins in 4 baskets. We work with futures, short positions, and so on. So we are directly in those coins. The safety is, first of all, that we do have an ear on the market 24/7. So the algorithms we're not sleeping even on last Saturday, 4 o'clock London time, when the market ran down for about 15% or something. So when I arrived at the fair of this conference on Saturday in the morning, prices dropped 15%. And the fun fact was I was paying with a wallet, a drink, and I had to pay 15% more than the day before with a token I just were given. So this is the safety side, and the question of how should a wrapper be, or how are we regulated, and so on. The point is that a lot of wealth managers in Germany are not as advanced as Plutus, and they do need something regulated to invest in. Like, and we are at the moment we are talking about an Luxembourg RIFE, which is a real it's a reserved AIF structure, but this is not the last answer onto this question. I guess we will certainly set up 2 or 3 different packaged products for everyone who would like to have a exposure in this market. But at the end of the day, it's a step back in my eyes, because if we use an AIF structure whatsoever, we have extra costs. But for most of the clients we are talking to, especially the big ones, the institutionals, they do need one, because they need this regulated assets, and they do not know how to put it into their portfolio, because they are so highly regulated that you know everything has to have a number on it, where to say in which box should it come, and if you do not deliver this number, they won't sign any contract. So at the end of the day, it's a step back, but we have to do it, and I guess it's a step forward in the other direction, because US institutional investors are 2 to 3 years ahead of us. If you look at to Grayscale or to MicroStrategy, MicroStrategy alone owns, I guess, I've seen a number, I don't know if it's correct, but I think they own more than 20% of Bitcoin at the moment. And the Grayscale has 5% of the market. It's about 48 billion at the moment. And this is only for institutional investors in the US.
Interesting. So can
I say
yeah.
We are in this part on the complete beginning, because the markets are at the moment mostly of private investors. So the big companies can't invest in the crypto markets also, because the regulatory is so high. For in Germany also, or in Luxembourg, it's a little bit difficult as in Germany. Liechtenstein as well at the moment with the complete crypto thematic. But the big companies and the big thematic at the complete crypto market is at the beginning. At the moment, it's a private person, so on the first institutional investors. But the big institutional part for this complete sector will be starting in next year, also the middle of next year.
So let me ask a little bit about what I call the ETP or ETF wrappers. They're not ETFs because of the legal structure, but more like ETPs. In Xetra in Germany and in Switzerland on the SIX exchange, there's been quite a few products. Our own database is tracking, a couple of dozen. The names to file away now is 21 shares went to the market with a range of products. ETC and with pan ETF of put out some products. Invesco dipped into the market a couple of weeks ago. Wisdom Tree, they've got an increasing presence in this field. Okay, so again, it seems to me actually I can just treat these now. They trade like stocks because they're listed on the exchange as a pseudo ETF. Why should I bother doing it any other way? Why not just, I'm an institutional firm, I'm a retail investor, both of them can buy his products at the same price and just get on with life if that product's available in the market that they invest. What do you think to that view? Or am I oversimplifying it? You know, so
I think it's part to what's the best for your strategy. So you can take a ETP of any cryptocurrency, so and choose that one as a part of your portfolio. In that, you can direct invest in that part, and if you are, if you are your own investor, or you need a wealth manager for that too, because the cryptocurrency market, you can trade it 24/7, complete week, every time. And if you have a long-term strategy in your portfolio, you can use the ATP. It's no problem. This is also well. If you shade, I like a little bit day trading also. The ATP is not the best way so to invest directly in the crypto market. Then you choose only a direct coin also for that part. Or if you say I choose it and will a little bit a hedge for my portfolio in that part, then you choose a future product in this part and mix it on your portfolio up. So
yeah, and what do you think to the idea of, oh, forget trading the complex stuff, just go with the listed products?
You mean just go long, or what do you mean?
No, well, no, what I'm saying is that operationally, it feels like it could be satisfactory just to use the exchange traded products listed in Germany and Switzerland and just run a wealth management business like you used to, whereas you, I believe, are trading directly into these new securities, as we might call them. And what if you had a view on that, actually, you know?
Well, the ATPs are basically, they are limited. You know, if I buy one, it's a hold. I mean, I'm holding a position. It's only long positions. It's not, and even we were thinking about setting up an ETP, but you can basically define an index in an ETP, but you are not allowed to trade in it actively as we do it at the moment. So a lot of the safety that we could not guarantee, but build up our algorithms is just vanished if we do an ETP. It is certainly a good idea to have some exposure at the end of the day. If you have a long strategy, it's certainly a good idea to have some ETPs in your basket. But to trade, it's much faster, and you have a premium normally. You have normal ETPs. There's I think Grayscale and others and Pantera and so on. They have premiums between 10 and 30%. So, and we are trading directly. So it's a different approach. It's not as regulated. Therefore, for some people, it's not available at all. Every institutional is out of this at the moment. They need a regulated product. So this is one of the reasons why we are only trading with family offices and high net worth individuals at the moment. So we have no institutional investor at the moment. I'm talking to some banks for their Nostro portfolio, for their Depot A, and I'm talking to some wealth managers with multi-family office approach, and I'm talking to some of the bigger insurances in Germany, but they all say, well, yes, come back when you have a product where I may invest in, and then we can discuss this. But at the end of the day, this will need another year. So I think there was another question in the chat about this subject. Yes, basically Germany is far behind because the institutional investors in Germany are much more regulated, and our first legal entity was in Liechtenstein, because of the fact in 2018 they were the only ones who had a kind of a regulation, and Germany is still, well, we have the possibility for institutional investors, for AIF, to invest up to 20% of their portfolio into cryptos, but therefore they need another vehicle, another wrapper to invest into it. And this is something we're just building up, and Plutos has their solution, which is great. This is, the first wealth manager we know which is going that way, and all the others are standing behind and saying, well, it's not regulated, I can't invest, or I do not understand it, I can't invest, or it's too new, or won't invest, so these are the reasons why people are not investing at the moment. I think they miss out a lot.
Okay, so as we wrap up now, what I'd like to do is, one, give the audience a chance to answer the following question as well, and that is, what's missing from the ecosystem, to make them comfortable to, get more actively engaged as part of their day job as their mission to deliver wealth management solutions? But in case they're shy on this, we'll ask both of you that same question. So, Patrick, if you could have a chance to influence the governor of the Bank of England or of the Fed or even the German, authorities, what are you asking of them to make things better?
Or it's difficult questions on this part. We find two partner banks for the complete wealth management of the cryptocurrency, and one for the trading and one for the ownership, so for the complete part of the wallets. And it's regulatory and not really easy, and the compliance officer by Plutos loved the complete thematic. So also it was a long way for the institutional class, but we have all in the complete team the same story. So many people want in the complete market, but nobody can with the institutional license. Is a very big part for this, and so you must find the really big partners with that. They have the power of their complete regulatory. Yes.
Okay. Yeah. And Jan?
Sorry, what was the question again?
The question is, you're down at the bar and you've managed to get the Fed chairman and the governor of the Bank of England, neither of who are fans of crypto. What are you going to ask of them?
Well, I mean, those two guys, this is, if you talk with them about crypto, their opinion is like asking a cab driver what he thinks about Uber. It's a disruptive technology, and some of their weapons are taken out of their hands because people are starting to, reduce their risk with their fiat money by investing into crypto. There was one saying on this conference. One guy said, "Oh, it's not the all-time high of Bitcoin; it was the all-time low of the US dollar, because the inflation that we can't see, the asset inflation in real estate and so on, is much higher." But to come back to your question, I would say banks can certainly profit from this new strategies. I mean, every central bank should have their cryptocurrency, of course, and that should be done quickly, because otherwise other people come, or more or less serious institutions will do that on their own. And to have a tool in this market is certainly a good idea. To have a euro coin and a Brit pound coin and so on. There are some already in the market, and they're very small. The biggest one, besides the coin which is traded the most, is the US dollar. So there are two coins, the Tether and the US dollar coin. And that shows what the market needs, because it's so easy to transfer money from one point of the earth to the other in a couple of minutes, well, depending on the underlying blockchain. But that's certainly something which they should do. And I would say, look into this market get acquainted with it, because in a couple of years it will change everything that you know about assets and about the financial market as at all.
Okay, right. So I'm going to wrap up now. We've got 2 questions on the chat board there. I'm going to answer one of them because it looks like it's a great question for me to answer. Then I want to wrap up with you 2 offering the answer to the other. So the second question is, how can we manage the downside volatility of cryptocurrencies, and what are the top 3 risks? Well, that's quite easy. If you do a well-constructed target risk portfolio, even on a multi-asset basis, and I drop in 3% Bitcoin or 3% Ethereum, whatever, 5% even, it's very easy to demonstrate that that gives you an entirely satisfactory solution that has the correct risk management properties that you would expect. Nothing's guaranteed. And in fact, Algo-Chain has built all the tools to help everybody do that. So I'd like to invite any member of the audience to check them out. We have some case studies that you can access from the homepage. You'll find a button at the top of the page. And the other genuinely serious question, of course, is the one, it's like, what are the due diligence steps, you know, or the measures you're taking to make sure you're doing the right thing for your wealth management clients? Let's leave the sort of the top bullet points in everybody's mind as we wrap up today, please.
Yeah, the top 3 for us also, that we have the viewing about the coins, the market capitalization, because if we have a downsize, we must guarantee that we can sell it on the market and downside the price completely. If we have a market capitalization over 100 million, also is not the right coin for wealth managers. So, and we must check, is the customer really the right customer for crypto wealth management? So first of all, and one of my questions are for expensive is, if you lose 50% your money overnight, can you sleep good or not? Yeah, this is one question that we ask normal people. But if the people say, oh no, a whole weeks of 30 is too much for me, then it's not the right customer for crypto wealth managers. So, but it's a little bit harder in this way. We have higher weeks, higher performance, and manage that, but this is possible, of course. And then, yeah, the right ETPs in this sector. We checked that the coins is direct invest in the cryptocurrency. So, and then the back test, and so also we checked normal currencies after it and behind it. Yes.
Okay. Yeah. And Jan, so what would you add or replace in that list?
Well, some things we've said already. So that's the correlation is very low. So it's always a good idea to mix this with all your other assets. The second thing is the highest Sharpe ratio in the market. We outperform the market. We reduce the risk by or up to a third. So that means that let's say like in May when the whole market fell about 50%. So Bitcoin came down from 65,000 from his all-time high back to somewhere around 30,000. We had a loss of 16% because all our algos were working properly. Well, we do lose some money, of course, but we even went short with a 2x leverage a couple of days. So we reduced the loss that all the others had. So the point is, everyone in the audience who's not invested yet, just open a wallet. It's very easy. Just buy some small coins and start trading with it. Get an idea of what it's like. And if you like professional help, go to Algo-Chain, go to Plutos, or if you have a little bit more money, we start with 100K, then give us a call and we may help you how to set up the perfect portfolio for you for the next years, not to miss this next huge trend.
Fantastic. Well, I think that's a great note to wrap up on. So firstly, I want to thank the audience. We've had a superb turnout for this event. clearly I want to thank Wealth Advisor for distributing our invites out to such a large audience. So thank you, Beverly. And of course, thank you to Jan and Patrick for giving their insight, for being hands-on practitioners. Our next webinar will be in the 3rd week of January. We are finalizing the details, so you will probably learn about that between now and the end of the year. If not, it will be in the 1st week of the year we do the marketing. So thank you to everybody and have a great day.